Thank you for coming along to watch this video. Huge amount of volatility. So the big question in everybody's mind is, where do we go from here? Well, let me just break it down, tell you what I'm seeing and share that with you, and then I'll look at some levels that you may want to watch as well. So end of January we had the trend line breakdown, so we had this steep, very steep incline. We got very extended on the MACD. On all the indicators were shouting out sell, and so a couple of days of selling, hesitated, coming to February, and then we just drop. And if you're a moving average fan, then you can see we've come down to the 200-day moving average on this daily chart and started to bounce. So there is some heavy green bars in there, but also some light heavy red bars, sorry, and some light green bars. So the reason why I think we've still got some distance to come to the downside is that the reason for this drop is pure and simple. Stocks were very expensive, and the earnings ratios were getting out of kilt with the market. Although the earnings season and the fundamentals are still good, GDP levels are expected to be 4% plus, maybe even as much as 6% in the US. Employment levels are improving all the time and have been for some time. Wage inflation is very low. That's one of the issues. But of course we've got an interest rate cycle, and of the last 13 interest rate cycles, 10 have resulted in a recession. So as soon as the market sees interest rate rises coming down the line, it tends to reflect on the potential for that to affect the market and reacts. So yeah, let's pin these markets back and let's predict what we think is going to happen. Okay, so it's obvious that yeah, we're hitting. This is a 200-day moving average. This is the 100-day moving average, 50 and 20. So we've now got the 20 and the 50 potentially coming down to cross, and we're just underneath the 100-day moving average as I'm speaking here at midday, Monday the 12th. It's coming up to 5 to 7 in New York time in the morning. Okay, so New Yorkers are beginning to get to their desks. So I think this potential 100-day moving average could be sold into. If I'm right and we hit and we don't break through that resistance level that's picked up on the 4th of December, then I think we could come down to these levels here. Okay, so the structure of this chart for me says that we could come back to this level here, this support level at 23,640. So that's significantly lower than where we are now. Of course, I would change that analysis if we close above 24,500 anytime soon. Otherwise, I would keep shorting. If you're an Elliott fan, which I am a massive Elliott fan, we've had 1, 2, 3, 4, 5, and we're getting a 1 wave correction. 2 and 3. There's potential for that to create a 2 and a 3 from where we are now. But so how are you going to trade this? Well, I would suggest, bear in mind the volatility is incredible. I haven't seen anything like this in my many years of experience. You've got 2-minute bars that are 70, 100 pips. I've never seen anything like it. So what I would suggest to you is this: drop down. If you're a day trader, that is. I'll talk about swing trading in a minute. If you're a day trader, this is okay. It's a bit messy, isn't it? I won't go to details because this is what we do in our live trading room. So I'm not going to go into details here. But 15-minute chart, and this we had a buy signal here at 6:30, 6:45 Friday evening. So I suggest you move up a time frame. If you're used to using 5, 10, 2, 5, 10-minute charts, whatever you're used to using, go up a time frame and look for at least 15-minute buy signals. If you are wanting to see if you can pick up a reversal here. If you are bearish like me, then wait for sell signals. And some of the sell signals we had last week were like this. We had you have this significant push. Let me just, this significant push the upside, and then we started as we got higher, we started seeing these sell signals, and finally in the last half an hour of the market we got a lovely sell signal. It drops down, so that's the height of the day, 25,295. That was a resistance level, 25,180. We touched that resistance, so the reason why it's a resistance level is because of the way in which we sold it here for 30 minutes. Once we sold here, we dropped down from that 183 level we dropped a huge amount. I mean, even from that level there, that's 25,183, came down to 24,9. So what's that, 300 pips in 45 minutes? Unbelievable. So if you had your charts marked up with just basic support and resistance, you would have seen that a lower close underneath the moving average, and then we drop for a nice half an hour into the close. Other sell signals, I will start to clean this chart up because it's getting really, really messy. I'll take this off. Friday, is this Friday? Thursday. So that was resistance key pivot level from Wednesday. Just about closed above it, so they took it to where they didn't want it to go to, reversed it. That's clearly a sell signal because it's a new high, closed below next bar. I'm not a massive candle fan, but they are useful. And once we close underneath that little trendline support, all highs sell that day, and we end up with a huge, I think it's about at least 800,000 pip move. So I think if you are going to day trade this, I would suggest that you go up a time frame and trade a minimum of 15-minute charts, and then see if you can get the move that way. Alright, I hope that helps. If you are interested in day trading, then you need to join Scalper School. Now there's a free introduction at Scalper School every Wednesday. In fact, I'm going to change it this week because of course it's Valentine's Day, so I'm going to go and change that. And if you go to Trade the Easy Way, come down to this, I should have had this ready, I'm sorry. Right, tradetheeasyway.com. Come down to, you can either come to events or down to Scalper School here on the Start Here button. And then if you look at this little post-it note here, where it says book here, that's the free 7 o'clock on Wednesday. I will just go and update that. Fill in the date you want to join us, name and email address, and then we'll book you in and we'll give you a free introduction to Scalper School. Right, if you're a swing trader, let's go back to the daily chart. If you are a swing trader, then I would suggest you start looking at any highs up here with a stop. Well, you've got to have a huge stop, so it's very, very difficult to swing trade this unless you catch signals like this. Let me just drag this in the middle of the screen. So you might, I would advise, once the move's on the way, I would wait for some higher levels. I mean, my advice to you is if you're going to short as high as you possibly can. And the MACD is so low here at the moment. You can't. I don't think you can swing trade this down here. What you could do is wait and see if we get any penetration of these higher levels. So we fib this range. You can see the 50% is up here at 24,900 on the top of the zone. So this is the outer zone, this is the inner zone. If you're not familiar with fibs, I thoroughly recommend you get familiar with fibs. So these levels here, the level I'm already looking at in this early part of the week is 24,500. but any sell signals up here are likely to be potentially get another wave down. Okay, so longer term, with the sort of statistics that are coming out of the US, I am bullish. I'm looking for this to pick up and return back to these highs at some time. I'm just not looking for it immediately. I think that may come back end of February, potentially into March. More on this as the week unfolds, but in the meantime, go on to tradetheeasyway.com and grab yourself a seat on that Scalper School introduction, and we'll talk about day trading. All right, we've got a 77% success rate on the system we use. Come and find out. Thanks for joining, thanks for listening, and I'll update you as we go along. Bye for now.